This is Dave at TitleRecovery.com. A question comes up quite frequently as we're processing title recovery cases for clients is, what about sales tax on a car title? In many cases, there is sales tax due on a vehicle if it hasn't been titled by the current owner. What we do to determine the taxability on a vehicle is we start by looking at the history of that car, the background of the vehicle, the chain of title, what available records are come with the order. If you as a client have prior title copies, prior ownership records, a bill of sale with good contact information, in a lot of cases we can put together the best, most efficient package to minimize the taxes legally on your vehicle. We find the best process that's going to get you your title with the least amount of taxes due. Who is liable for taxes on an untitled vehicle? Well, the definition of tax in almost every state, it's known as a sales tax or a sales and use tax. So whoever is going to be using the vehicle has the liability. On a sales tax, whoever is purchasing the vehicle has the liability. So in most cases, it's the person who is going to have the title in their name because they're the one who purchased it, or they're the ones who will be using it. We, at that point, will use the lowest legal book value to book out that car. Most states will use either the book value or the purchase price, whichever is greater. So even if you have a bill of sale for $1, the states are going to know that the car is worth more than that and go by the book value, unless you'd like to do an inspection or an appraisal to demonstrate and prove a lower book value. Remember that sales taxes are paid only one time by the purchaser or user, and that covers you for as long as you own the vehicle. And it's state reciprocal, meaning that depending upon the state where your title will be coming from, even if it's not your home state, once you convert that title to your home state, that sales tax you've already paid is reciprocal to your state. You don't have to pay it twice. If your state has a higher tax rate, in some cases you may have to pay a slight amount for the difference. But in most cases, once tax is paid, that's it. There is no other taxes due. Now, the other question is, do you have any contractual agreement with the seller? Did the seller offer to pay the taxes, or are they supposed to pay the taxes on that vehicle? If they were, you may have a case to go back against them and collect that tax from them. But in most cases, the current owner, the current user, is liable for the taxes. It's not something that any replacement of title, it's designed to evade taxes. Taxes are due on a vehicle to purchase it and or use the car, and until that collection is done by the state, the car really can't be used, which means they won't issue a title for the vehicle. It varies from state to state. Again, depending on the history of the vehicle, that'll determine which state where the title will be issued from. Depending upon what available documents and records you have as an owner, may also change that taxability. So the more records you have, if you have old license plates, if you have old registration stickers, even if you have an owner's manual that may have some owner information in it, that also might be helpful to come up with the fastest, most efficient way to title the vehicle with the least amount of taxes due. There may also be taxes due from prior owners if they flip the car without taxes, but that's something that would be determined by the investigation, and those prior owners may also owe taxes on the car in addition to yourself. So taxes on vehicles is not something that can be evaded, just like income taxes. That vehicle has to be taxed in order to be on the road, and part of that title recovery process is determining what's the least amount of taxes that legally can be charged.